All right, good evening, everyone. Thanks for that introduction. Thanks the panelists. Thanks for joining. We have had a good interaction outside as we were waiting for our turn to come. So a lot of questions have already been answered by them, but for the sake of audience, I'm going to ask it again. But first of all, a round of applause for yourselves, guys. Sticking around till so long on a Saturday evening at least speaks something about the credential of the panel, right? And let's live up to that. Let's try to do that. Let me start, Tarun, with you. Obviously, we have known each other for quite long, so sorry others, but I'll take the liberty of starting with Tarun. I think Indian gifting portal joint ventures have been around for a while now. You know, you've seen pre-COVID era, you've seen COVID and now post-COVID. How retail has evolved, in your view, as you have seen the space so closely, right? And the high points, the low points, how retail generally has evolved in India.
Yeah, hi everyone. My name is Tarun Joshi. I run a gifting brand called IGP. Question is very relevant. I guess when we started way back in 2016, vertical commerce was a very, very new phenomenon. It was like horizontal commerce, e-commerce, big retail stores. Yes, there were EBOs for brands, but at least in the online world, there weren't much options. From there, I think consumers started getting more and more adapted to vertical commerce. Then came the whole, what I would say in today's world is a very channel-less approach. I don't think so. People think today that whether I'm interacting with a brand which is an online-first brand, it's a retail-first brand, it's a modern trade brand, it's a shop-in-shop brand. What is very important is what is my experience with the brand, and I need to see multiple touch points with that brand. Wherever I go and see, whether it is now with the evolution of quick commerce, I want to see that brand over there listed. If I'm going on Amazon, I want to see that brand. If I'm going around airport, right, and if I get access to that brand in any which way, right, that also creates a much more lasting impression. So I would say that from a verticalized version of whether channels or platforms to today, which is a very channel-less world, right? And we need to be present everywhere as a brand, and that's what has been the success mantra, I would say.
Great, thanks. And success in how they've grown to a 400 CR ARR brand under joint ventures with Indian Gifting Portal, Interflora, and a couple of other brands as well. So I think a round of applause for Tarun and the team.
Thank you.
I'll now come to my fellow investors / competitors. But we have Amit here in the house, Amit from Fluid Ventures and a good friend, as well as Harmanpreet from Prath Ventures. So question to both of you, and a very boring one, right? How do you assess good ideas or good startups in this space, which is again evolving? And we have seen the highs of D2C, of the madness of 2020-21, right? And now with the funding winter, where everything has been questioned around D2C, right? Have you seen the journey again, wearing your hat as an investor?
Sure, as you mentioned, it is a competition, so the same way you evaluate those startups. But having said that, so definitely, see, for investing in a startup, the fundamental always remains same. So there are always a flavor of the season where we invest in a particular type of startups, but we feel that fundamental never change. And that's how we evaluate the startups, that where the person are going as a consumer. So that's the main thing. What are they liking? What are they don't like? Even we can say that there was a time where the valuation was skyrocket in D2C. I will not say that there is any negative sentiment in the D2C space. Definitely from valuation perspective, lots of things have been corrected. Like in 2021, we have seen 8x multiple of the top line, even not top line, that was the 8x of the GMV. Now people have understood the definition of what is the net sale after GST. They have understood that how they will survive in the longer term in case they will raise the money at early stage at 8x. So that's how the valuation have been corrected, but we evaluate based on the market scenario, and our thesis is very simple. We look the product from the Bharat perspective, not from the India perspective. We always see what tier 2, tier 3 cities consumer are looking for, and what are those things which are not available there. So based on this theory, we go ahead with the market, and based on the background of the startup founder, we invest in the startup.
Great. By the way, Amit and Harmanpreet, no harm in using the platform as little bit of self-marketing. Maybe, I think since the moderator didn't do it, and I would love you to kind of introduce yourself as well. Fluid and
Sure.
Harmanpreet later on.
Yeah.
For Prath as
So
well.
my name is Amit Singhal. I run a fund called Fluid Venture, which is fully focused on direct-to-consumer brand. So we have invested in 10 companies till now. Few of the known companies are Bummer, Master Chow, Coparo Clean, which you have seen on multiple platforms, and some other are Redesign, Beauty Wise, which have not appeared on the television yet. So these are the major companies. We come at pre-series A level. Our ticket size is 3 crore to 5 crore rupees. That's what we invest in a startup.
Thank you, Amit. Harmanpreet, over to you.
I'll start off with an introduction. My name is Harman and I'm the founding partner for Prath Ventures. Prath is a seed to series A VC fund. We are very focused on the consumer space. India consumption is our theme. And I'll cover what within that what we look for as part of your question. Personally, I've been an investor for 15 years. Prior to Prath, I was with a firm called Multiples, which is a growth stage investing firm. And at Prath, we've invested in 5 brands so far in the last 18 months. One being Assembly Luggage. There's a brand called Okera, which is into lab-grown diamond jewelry. There's Jimmy's Cocktails. There's a brand called Eat Better, which is into healthy snacking, and so on. I think at least I personally came into venture capital in 22, which is, so I didn't see the peaks. Only as an outsider did I see the optimism of 21. So when we came, actually D2C was not really or consumer was not really considered a great sector to invest in. People felt, the online story was kind of over and now, what the playbook was going to be. And that sentiment has kind of now started swinging, and I would say swung to a large extent to the other side. People are again very bullish about India consumption. So I think that's going to go up and down with whatever GDP numbers come. I think the sentiment changes. But overall, as a fund, we are very very bullish on India consumption. I mean, that's what we are betting on for over the next 10, 20 years. Within that, we feel premiumization is a big trend. Any category which is kind of becoming more premium, catering to the top echelon of the economy, we think that's a great place to be in right now. We would love to do more India 2, Tier 2 stories as well, but somehow that's not happened yet for us. Second thing I think is the rise of the Gen Z consumer. I mean, I think now they outnumber millennials, but I think the newer generation consumes very differently from the older cohort, which is me, right? Third is I think there's a lot of channel flux happening. We were just discussing quick commerce, and for certain categories, it's like a great boon, for not so much for other categories. So I'll stop here and maybe come back with others.
Oh, great, Harmanpreet. Thanks for that. Saurabh, coming to you. Of course, first of all, introduction of Verismart, and I met Saurabh outside. Last 3 years, they have been profitable and haven't looked at VC. Saurabh, why do you hate VC so much? You don't even like us, don't want to take any funding and running a profitable business. But first, introduce yourself and then talk a little bit about the business. The question to you is, of course, technology, right? A lot of retail businesses where technology is more of an enabler, and a lot of businesses now with the evolution of retail tech, have you seen tech kind of taking the center stage and driving the entire business itself?
So, quick introductions. Saurabh Gupta, third-time entrepreneur, sold my last 2 companies, one to Times Group and first one to a UK-based private equity fund. Talking about Verismart.ai, we are a decentralized data infrastructure company. So we are building, we are on a mission to build the world's largest data infrastructure. And for that, we are creating a cumulative intelligence across all the touch point of a consumer, whether it may be a bank, telecom, a logistic to e-commerce brands and other set of touch points. So we are bringing a data privacy layer of your data and helping all the large organization to scale with the data intelligence, where data intelligence has become the key for any business growth. And that is where we believe that in order to solve for the AI infrastructure of the world, you first of all focus the fundamental and the basic, which is the data, and how data interacts with each other in a privacy compliant manner. That is what we are solving for. So we have already scaled to more than 580 million consumers having a touch point with our framework, and we are multiplying on that. So talking about technology, I think every retail business, they have been trying their hands on different set of technology to solve different processes in their day-to-day operations. They have been trying to do this from last 1 decade. But in the last couple of years, when they have seen that with the rise of quick commerce, with the rise of consumer expectation to have an enhanced experience or a connected experience, they need to invest more on technology to bring the same set of one-click behavior at when someone is experiencing on quick commerce or e-commerce platform to a offline retail as well. So retail organization have been spending a lot now on the technology. First layer is to captivate more and more user data points and try to build an intelligence infrastructure on top of it and understand their consumer in a deeper sense to kind of pitch them a hyper personalized product itself, because that is the edge which most of the online businesses have already gained in the present ecosystem, and where retail trying to match up on that particular competition itself. So currently from last 3 years, I can see a lot of retail businesses are not only investing on expanding their infrastructure, but also expanding on automation of processes, bringing that consumer inclusion for the experience part of it, and making or even going omni-channel in terms of not limiting themselves to an offline, but also having all the touch point of a consumer being covered. So that is something which is happening, and it's a good part that they have understood it well in last couple of years. And I think a lot of online businesses have given them that kind of a fear of missing out, that if they do not understand the vibe of a Gen Z and a consumer in a better sense, they will lose out a large chunk of the market itself.
No, sure. And I think personalization is a very important point that you spoke about. I'll come back to you later to pick your brain on a couple of more things around that. But meanwhile, Subbu, your turn. And sorry to keep you last, but debt usually follows equity. So I think by design, I kind of kept you at the end. So Subbu, why don't you introduce yourself and Velocity? And then the question is, so hitherto, I think startup evolution overall, debt was never envisaged initially, right? I mean, I talk about my first investment way back in 2014, and it's been a decade now. The way debt has now kind of gained prominence, but it's been a bit of a struggle because typically you don't have a rich credit history to kind of bank on. Cash flows are sparse, right? Some of these will be pre-revenue, losing money, at the end of the day. How do you kind of build your confidence, trust around this? And, how are you now looking at the sector, especially retail, from a debt provider's perspective?
Sure. So quick introduction, I am Subramanian. I lead the partnerships vertical here at Velocity. As Velocity, if I have to first talk about debt versus equity. As D2C brands, a lot of thousands of brands apply to get equity funding, but very minimal, like not more than say 1-2% folks finally end up getting the equity financing. But the real requirement for a lot of these D2C brands is a working capital financing, and working capital financing is a major requirement, and someone has to cater to it, and that's where Velocity as a company we came in, and what we could leverage on was the D2C boom which happened in 2021. Like a lot of people came online, the users came online, the brands came online, and we could leverage the kind of the data that we could see on say payment gateways, on say marketplaces and all of that, and we could really provide good financing to these brands and help them grow much bigger. On a retail front, a lot of these brands, like Saurabh was also mentioning, the omni-channel approach becomes inevitable these days for every D2C brand. They hit some kind of say for an apparel brand, 5-6 crores monthly revenue is kind of the maximum that they can get online, and they will have to go offline. So over there, debt partners really help them say set up over or on a COCO model or on a FOFO model and help them kind of become bigger.
Interesting, quite interesting. Tarun, Harmanpreet, Amit, I'll come to you for the next question. And this has been something that I have also been mulling over as an investor myself. So there was a phase, say last year and kind of continuing in this year, where people question that why don't you directly invest into Google and Meta, because most of my funding is anyway being diverted there only, where retail brands are spending a lot, especially for D2C brands and online brands. So how have you seen the trend now with digital marketing getting expensive, getting costlier, especially, everything SEO, SEM, AdWords and all. How has been your experience, Tarun, being right at the driving seat there for the brand? And then Amit and Harmanpreet, how have you seen in your portfolio companies?
So cost of traffic, you can assume that beyond inflationary growth will only increase, right? I have not seen a single year except probably a little bit of COVID time. But what happens is there is limited amount of inventory which is available. The best part is because it is so fast reach and it is so variable cost in nature that becomes the first point of contact for any brand. If I were to get, let's say, if I have to sell even like 1 lakh rupees, I know that I cannot afford any other campaign unless it is a localized campaign around my shop. But if I am an online player or a D2C brand, right, I would essentially go on a Google or a Meta and run a campaign. And I know that at least even if I spend 1.25 lakhs, I will still guaranteed that I'm generating about 1 lakh of revenue. So it was the first and easy point of protocol that typically any brand would go through. And then the system matures when you start understanding the value of free traffic and everything. Fast forward this journey now. So as I said that beyond inflationary growth every year, please, everyone should keep in their expectations. The only way to probably beat that is how do you get smarter, which means how well do you start utilizing your data? How you understand that technically it is not only the last click attribution, but actually a much wider scope. It's very difficult because most of these platforms are more or less becoming black boxes. So essentially you allocate a certain amount of money and assume let them do it and they will make money, but you have to be smart enough and say how do I allocate my money on various angles? That's the only way to probably run a profitable business.
No, great. Amit?
Yeah, so I fully agree with Tarun. Means there is no other option for the early stage D2C brand other than that's performance marketing, because ultimately you will have to put the money there. But definitely now the founders have become more smarter and they start finding the alternate way. Like we were discussing in the morning, micro influencer is something where they can do a target marketing for a particular pin code or the particular geography. So that's how they are looking for that. But again, that is an experimental, but people are doing that. So those are the options. But you are absolutely right. The margins which we have seen in the past, those are not there. So that is some way or other hitting to the bottom line. That's for sure.
No, I don't think I can add much to this. I think the cost of marketing, we've seen it grow much higher over the years. I think the way we look at it, right, there's always the next thing. There was e-commerce, which was new, and incumbent brands were probably slow to get there. So the newer age brands like Mama took advantage of that. Then there'll be some other channel, maybe, even quick commerce for that matter, or maybe Shark Tank was like a flex or a growth hack for some time. So I think you have to figure out what's still under exploited. Maybe it is influencer at this point of time and so on, and just keep doing that. And probably, just have so much customer love and use data to kind of iterate on your offering. So that's what I feel,
So I would like to add one thing here, because he mentioned about the TV show. Sometimes we have seen our portfolio companies, when they appeared on the television channel, their competitors start putting on those keywords which they were using earlier. So in fact, those keywords have become more expensive as they appeared on the television.
Yeah, agree.
So that's how the cost of getting customer for those companies have increased drastically, because they appeared on the television.
Very well said. Totally agree, Amit. Saurabh, coming back to you, you spoke about personalization. Now today, one thing which actually bothers me as a consumer is privacy. I think gone are the days where we can be absolutely certain that we are not being watched, right? Discuss amongst ourselves about buying a pair of shoes, and the next thing I see is getting an ad from some other platform for some shoes and all, right? So how do you read this, and how do you see this trend again going in terms of protecting consumer privacy?
So, before I touch the topic for the personalization and the privacy aspect of it, I just want to add to the discussion going on is that everyone agrees that data intelligence is the key. So now, what is the problem on the present environment is that the customer acquisition cost growing because the taxonomy which is being used on identifying customer is built on the likes and interest. This taxonomy in itself talks very abstract around the consumer behavior at large. Means you can have any aspirational model getting more likes and bounces on your page itself. But really, if you need those transacting customer, you have to understand the consumer behavior, not only at your own platform, but all other touch point itself. Now, the worst thing which was happening at past was the cookies. Cookies become the culprit in this entire thing because they were able to track the entire consumer journey without consumer consent being involved. Because many of us just go out of rush and hush. They just click on accept all cookies and itself. So the cookies was the demon in this entire picture because they are able to track all those touch points itself. Now, on one side, we are talking about data silos or data-rich organizations who wants to monetize their data. And on the other side, we are talking about consumer who wants to have a balanced approach where they want a personalization, but without their privacy getting infringed. Now, this is a problem which we call it as connected problem. Because this cannot be solved that you enhance the privacy layer so much that the business will go out of show. So it is a connected problem. It means whenever someone solving this problem has to understand both aspect of this thing and solve it together. So when we were building our data infrastructure layer, we realized that how we can lay down a framework and a protocol where consumer becomes the center or the nodal person as the principal owner of that data. They control what and which part of the product or category or maybe business they want to interact with, and they can actually go hidden for rest of the businesses itself. And on the same side, where the businesses are able to stop spamming consumers because the prior taxonomy of likes and interest was very abstract. They was doing the spray and pray model. So in the marketing world, we call it as spray and pray. The wider you reach out to the audiences, more probability of reaching or hitting the right target. So in order to make that funnel more optimized, you have to add more intelligence to it. How that intelligence can be brought together when these data silos start interacting with each other without exchanging data. So that's why we created this decentralized infrastructure where no data is getting traded. On the other side, user privacy and consent is being in the hands of the controller or the consumer itself, and they are able to interact. That is where we are able to have a balanced approach of having a personalization and privacy not getting tarnished.
So in one line, are we safe or we are not?
With us, yes.
That's some smart marketing. By the way, you have stolen the term spray and pay from us VC investors. This is something that we do, not the marketing term. Coming back to you, Subbu, revenue-based financing, right, and some other smart intelligent products have been used by debt providers in the startup world. What next? Any other interesting ideas, especially looking at startups where maybe revenue traction is low, right? They are investing in growth, so not focusing on profitability immediately, but there are working capital requirements.
So as of now, RBI has a lot of restrictions on products that you can innovate right now on the debt side. So they primarily want banks to kind of give OD kind of loans, CC kind of loans, and all of that. And NBFCs and fintechs are mostly restricted to term loans and the regular debt loans. But given that, at our end, we are looking to provide financing to more businesses by not just looking at what they do online, but also trying to assess like what they do offline through say the POS machines, like say Razorpay machines or whatever that they work with, able to kind of look at that data and able to provide financing to these brands. And for offline brands, the ability to kind of take financing would not just be restricted to just for working capital. It can also be to open, say, a new restaurant for a restaurant brand or
Right.
to open a new outlet.
Interesting. I'll start again with you, Saurabh. I'll not get my hamper if I don't ask this. What's the role of artificial intelligence in overall retail tech now?
See, we Indians have a bad habit of overselling everything. So we have to understand before we talk about artificial intelligence is that are we just using it for the sake of getting getting in eyes of all the VCs of the world, or we are really solving the problem using this technology. Artificial intelligence is another layer, I would say technology layer, which started with the process automation, now has reached to a generative stage, and in future will become independent of that and will become a as a artificial general intelligence itself. So we are going stage by stage on that particular thing from last decade because of the compute heavy principles and everything else. We were only limited to the RPA part of it, robotic process automation we call it, and then we reached to the generative AI stage. Now, for anyone which is looking at its business, they have to first identify which problem they want to solve in their business. If this is a core, fundamental, and at the same time gonna save money or increase the efficiency of the business, then only please go ahead and use AI to that particular thing. Otherwise, you are more than relevant. You are complicating your life and your investor, you irrelevantly burning your investor money. So that is one aspect of it. Second, when we talk about anything into generative AI space, currently we are able to see only, where the consumer experience, convenience, or maybe anything into the marketing world, we are able to see the generative AI use cases. Other set of use cases are still, are under the testing phase, or they are just trying to find a product market fit in that particular direction. That is something which we have mostly seen. Now, to the AGI, even the Jensen and the the leaders in this particular space says that it will take another 5 years to reach to that level where we are talking about AGI and other set of things itself. So I believe focus on problem first, then jump whether you want to AI to be sitting in your business and over your head.
Makes total sense. Makes total sense. Last question to the other panelists, and I'll go in the same order, starting with you, Harmanpreet. So we have seen the evolution from a core B2C offline brand to online brand to D2C, which are only online brands, e-commerce marketplaces, and now quick commerce, which is the new buzzword and all. What next? Any other interesting trend or any other interesting concept that you have come across now, specifically talking about retail or retail tech?
No, I think eventually, I think maybe metaverse will come next, but I have no idea about it. I think right now what we see is people trying to be truly omni-channel, right? So it's okay. There are a lot of brands which are present in many channels, but there is no, I don't think they're interacting seamlessly with the customer, right? Second is, and we were talking about this, I think every channel is very unique right now. And it's almost like, the founders of a startup have to go channel by channel and find that fit again and again, right? There's a different price point. There's a different product offering which is working in a certain channel. So I think right now what I see is at least people starting online and then trying to find, or starting with one channel, I would say, and then trying to find that product market fit across channels.
Great. Tarun?
I guess India has leapfrogged in almost everything. We never had such a large modern retail, and e-commerce became larger than that. Nowhere in the world actually quick commerce succeeded the way it is getting succeeded here, totally. Because it was genuinely solving a very, very important problem. One area where I guess India has just not touched upon it is live commerce. So that's something which is huge in China. Traditionally also, if we go back to historical brands like Amway, they were always built on live salesmen, right? Or LIC, right? They sold most of their policies using live salesmen. So fundamentally, we have that ability to inspire people to purchase something, and that is not something where technology and that old tradition has married in India. So I have really high hopes that it will disrupt in some manner in India.
Well said. Totally agree. Amit?
So I'm borrowing the point from here. He's telling about live sale. So I have a portfolio company called Woovly where they are into live commerce because most of the people are not comfortable in buying the things online because of language barriers and certain other things where they want to interact with the other parties. So Woovly is the platform where they give a solution to the D2C brands and they can interact with them lively. An influencer can tell about the benefit of those products. It is kind of home shop 18 of our days where people can send online. And I have seen that there are many companies coming into this space and they are changing the customer behavior in a very big way.
True. Subbu?
I think quick commerce is still underpenetrated. Like a lot of brands in our portfolio have just started, have just scratched the surface of it. I think there's a lot of potential there. And marketplaces outside India, like selling on Amazon in the US, UK, especially for a brand which has like good awareness across. A lot of people have started doing well and are doubling down over there.
Well, thank you, gentlemen. I think very, very insightful. If you agree with me, a huge round of applause for the panel. Right, and I'm clearly overstaying my welcome over here.